Hello everybody. Today's video is going to be about determining daily bias. Okay, so right off the bat, this is my order of operations or my thought process when trying to determine daily bias. So first and foremost, with everything else in trading, your higher time frame order flow, your narrative, it needs to be the foundation of your trading. You have to have an idea of where the weekly candle, where the daily candle is likely to expand on a higher time frame basis. Okay, so that needs to be the framework. After that, we want to understand what day of the week it is and power of three, and we'll get into that when we get to that slide. Where we are in the range, or in other words, premium and discount. The economic calendar for the week. So we want to look at red folder news, when that red folder news is occurring, and how we can use that to aid in our daily bias and expectation of price delivery. And then we'll also talk about some protocol that we want to have noted in terms of avoiding seek and destroy. Okay. And that's honestly a powerful tool when to know not to trade, when to just wait and allow price to give you more information instead of just forcing trades and trying to get in when there's a higher likelihood of there being choppy price action. Okay, so just like my previous video on high probability liquidity pools, the foundation again needs to be, are we expecting higher prices or lower prices? If you guys have not watched that video, I'll link it up in the top right corner right now. But again, with this video, this topic, determining daily bias, we need to have an understanding on what is higher time frame order flow telling us? Which direction should we be reaching for? So after I determine the higher time frame order flow, I want to understand where we are in the week, what day of the week it is, so I can form a plan and understand power of three. Which direction is likely to be the manipulation phase before reversing and getting back in sync with our higher time frame order flow. Now, in this video, we'll be looking at weekly and daily charts, but my open, high, low, close video, basically the same thing as power of three, accumulation, manipulation, distribution, very similar to power of three here, but that open, high, low, close video, we can also apply to 4 hour, 1 hour, 15-minute charts. So again, I'll link it right now if you guys want to watch it after this video. It's powerful for smaller time frames as well. But of course here, we want to focus on weekly and daily charts for framing our daily bias. Okay, so now we're focused on what? Where we are in the range. Are we in a premium or a discount? If we're bearish, we want to short where? In a premium, not a discount. If we're bullish, where do we want to enter our long positions? In a discount, not a premium. Okay, and trust me guys, we're going somewhere with this. We're going to get into a case study after this with actual charts, actual price action. But these things need to be the foundation when building your daily bias. Okay, these are the things you need to look for. And they are each just a piece of the puzzle when determining your daily bias. And of course, as previously mentioned, we want to know what news reports are being released this week, what red folder news, and when they are being released. Okay, because that can aid in when to expect big moves, when to expect expansion to get back in sync with our higher time frame order flow. At the same time, if we have a red folder event Monday and or Tuesday, it's more likely for that to serve as the reason why price is moved in the manipulation phase. Okay, and we can talk about that more later in this video and also in a future video as well. We can go more in depth on it. Now, seek and destroy isn't limited to just these things. At the same time as well, if these things here, which I'll describe, are occurring, that doesn't mean we will never get good setups. It just means to proceed with a little more caution, whatever that means for you. If it's reducing your risk, if it's waiting till lunch or PM session, if it's not trading at all, right? It's all your preference, but these are the type of things I look for, type of scenarios where I want to proceed with caution. So if they sweep the London high and London low before the New York Open, I'm proceeding with caution. Seek and destroy is more likely, right? They're sweeping buy side and they're sweeping sell side. They have large expansion overnight or large expansion previous day. I'd be a little more cautious entering the AM session, right? FOMC day, typically that report comes out in the afternoon. So majority of the time, I'll just take that day off, to be honest. Sometimes if the setup is super, super clear to me after FOMC, about 30 to 45 minutes after the report itself comes out, then maybe I'll look for setups. But FOMC, I'm really, really hesitant to enter anything because it's going to be highly manipulated. Okay, same thing with non-farm payroll week. You guys have probably heard ICT teach this 100 times, but after AM session on Wednesday, you want to wait till at least non-farm payroll release on that Friday morning. But even after that, no one's forcing you to trade after that release. Okay, but you want to. Those are the weeks you want to trade on Monday, Tuesday, and maybe Wednesday morning. Right? It's up to you. Okay. Another thing is that, say the previous week, right? So say we have large expansion previous day or previous week or overnight. If that expansion goes and reaches some higher time frame or major objectives, I want to enter that session, right, with caution as well, because I want to see some more price develop before we go either reverse or reach further, okay? And then again, you guys have probably heard ICT say this, but if dollar and indices are moving in the same direction, I'm just going to sit on the sidelines and wait until one, for lack of a better term, shows me that it's lying, right? And it's going to reverse, because you want them to be diametrically opposed, right? You want to be bearish dollar, bullish indices, and vice versa. Okay, so before we even get into this case study, right? Someone asked me in our Discord, which is free, by the way. The link is in the description. Come join, come trade with us. I'm not selling you anything. It's just a place for us to learn, grow, and learn ICT together, okay? But someone asked me in Discord a week or two ago, how do you determine higher time frame order flow, right? I feel like everyone kind of thinks of higher time frame order flow as some big bad monster in the woods or something, but price is just fractal, and this is how I described it to him. Price is just fractal, right? It delivers the same way, just looking at price in terms of technicals, right? This is a weekly chart, but if it was a 30-second chart, a 15-second chart, a 1 minute, a 5 minute, I would still be internalizing it the same way as a daily or a weekly chart, right? It doesn't change the way I read price. You don't just switch from a 1 minute chart to a weekly chart and then just you're reading price a different way, just in terms of the technicals that you are seeing on the screen. The only difference is that you're trusting the higher time frames more. You're prioritizing the weekly, the monthly, the daily, the 4 hour, opposed to just a 1 minute chart. Okay. But all that being said, that's why the weekly and daily is the most important, because this is the time frame. These are the time frames, the higher time frames that institutions are going to operate on, right? They can't get all of their orders, their entire position of millions or billions of dollars into a 1 minute fair value gap, right? So they have to have these larger time frames in order to position themselves. But we're just reading this the same way as we would any other time frame. But now that that is out of the way, let's get into this case study. Okay, so looking at this weekly chart, this is the S&P. If you have not seen my algorithmic signature video, I highly recommend you go watch it. I won't say it here. Someone tell me in the comments what this weekly algorithmic signature is telling us right here. That'll be the homework. Someone tell me in the comments what this is telling us right here, this algorithmic signature, okay? But besides that, we've been delivering to the sell side, so we're bearish. And this obvious swing low should be what? Our sell side objective. Okay, so in terms of day of week and power of three, what is occurring on a Monday? It's the open of a new weekly candle. So if you look at any time frame, but this daily, the weekly time frame before, they all have wicks. In other words, they all have what? A stage of manipulation before the distribution phase, right? If you look at this day, we went up, created the high, created the wick before distributing lower. Same here, right? But if we look at Monday and Tuesday, it's reasonable, if we are bearish bias, it's reasonable to have some sort of manipulation leg on Monday and or Tuesday, right at the start of the week, because this is trapping longs to people think that we just took out this low and this is going to be the new bottom. And it's just serving as the manipulation phase, right? Delivering to what? This daily fair value gap. You can see also another algorithmic signature. We did not even reach the high of this, right? And we didn't even reach this daily fair value gap and then displaced away, right? That's another algorithmic signature telling us that what? Price is weak, okay? But this is how, when a new week opens up, you can expect a manipulation leg. It's actually what you want to see, right? Because price is digging deeper into a premium, a short-term premium, which we'll see on the following slides. But we want to see this manipulation phase early in the week before distributing to our sell side objective. Okay, so now going into Wednesday, our bias is bearish. It's reasonable to expect a short setup now, right? There's other concepts that we have to blend on smaller time frames, which we will look at in the following slide. But what occurred on Monday and Tuesday? Well, we had manipulation upwards. Our higher time frame bias is still what? Bearish. We haven't met our sell side objective, right? So we still want to prefer shorts. We reached back into a short-term premium and we got our algorithmic signature right here, failing to get to the high of this SIBI and this breakaway gap, which isn't charted here. So it's reasonable to look for a short on Wednesday. So now this is a 15-minute chart of Wednesday's order flow. So as you can see, this is that signature we were looking at, failure to get to the top of this daily SIBI. We have a buy side purge. Then what do we have occurring here, right? If we are bearish, where does ICT tell us that we want to enter our short positions? Above midnight opening price, right? This vague, right, faint dash line here. That's midnight opening price. We swoop above it. What are we also doing? Purging a session high. We're purging London high. That's what we want to see. And also, icing on the cake, we're coming up into this red SIBI here, right? This 15-minute inefficiency. And we just looked into it. It might not look like it did not here, but we got it by one tick and then sold off. So those three things in and of itself are exactly what we want to see if we're bearish and we're looking for shorts, because the business should already be done up here. We've had the buy side purge. We've had the algorithmic signature. We've had the PO3 Monday and Tuesday. It's reasonable that that was the manipulation phase, and the profile is the Wednesday reversal, right? Okay. And this video won't be for 1 minute entries or 5 minute entries, whatever you guys execute on. This is more so just the logic behind this, right? And not charted here. We're also in what? From this swing high to the swing low, we come back to a short-term premium and complete these three things right here that we already described. And just to finish out this case study, right, you can see on Thursday and Friday, we did reach to our sell side objective. And for sake of time, we're not going to go in and look at the lower time frames like we did the previous slide on the 15-minute. But that's your same logic, same thought process you want to have in mind entering Thursday, entering Friday, right? As long as the sell side objective isn't met, you should prefer shorts. Now, that doesn't mean just enter a short right here. It means it's reasonable to expect delivery to the higher time frame sell side objective, and you're just waiting for price action to show you, right? It's dug into a short-term premium, it's taken out a session high, what have you. All those things, you combine those concepts, right? But your bias, it would be reasonable to expect continuation to the downside to our higher time frame sell side objective. Okay, so taking a step back and looking at the week with the economic calendar, we can see what occurred. Monday, remember the seek and destroy protocol, right? We had large expansion the previous week, and we had no news here. So it's expected for this chop, right? But once this candle closes, what does it create? This daily SIBI, okay? What did I mention earlier in the video? If we have red folder news early in the week, it's reasonable for it to be utilized as the reason we go and get premium inefficiency in this case, or the reason that it acts as the manipulation phase. So you can see Tuesday, red folder news, PMI, sends us up, traps longs, and is just delivering to this inefficiency. Okay. Wednesday, we have Powell speaking, and Thursday, as usual, we have unemployment claims. And those are catalysts, right, on top of obviously the technicals. But those can be the reasons why we can expect price to go lower, right? Because the PMI, the red folder news on Tuesday, was utilized to go up already, right? We've already had delivery to the SIBI and then that algorithmic signature. And now we're just hunting shorts until this sell side objective is met. And finally, just one quick example of seek and destroy protocol. This was actually from today's trading day, which is November 6th, 2023. I was in live in voice with the Discord members, and I kind of said I wanted to enter today's session with caution. Why? We had large upwards expansion the previous week, and we also had no news. Okay? If you look on the right side here, look at this chop. Look what they're doing. They're taking buy side, they're taking sell side, they're generating these equal highs, they're taking sell side again, right? It's just chopping back and forth. So when we have our protocol in play, it's better to just wait for PM session and see if you get a setup there. Okay. And again, there's various examples of how we can expect this choppiness, but we can do that in a future video, or just come join the Discord in the description below and we can just talk about it in voice there or something. So thank you guys. I hope you guys learned something in this video on daily bias. Come trade with us again. Free Discord in the description. Follow me on Twitter, X, whatever you want to call it, at RealTraderTim. Okay. Keep grinding, guys. Keep learning. Keep trying to get better every day. 1% better. Right? It's not going to happen quick. It's going to happen over time. Stay consistent. Trust the process. Submit to time. But be sure to like, subscribe, all that. I'll be posting videos in the future on other topics, maybe some daily reviews, some of my executions, but I post most of my executions on Twitter, so make sure to follow me there. But other than that, thank you guys for tuning in. Hope you enjoyed something in this video, and I will talk to you guys soon. Thank you.